Welcome to the Deep Dive, where we slice through the noise and get straight to the insights you need. Today, we're plunging right into the core of global financial markets. We've got a stack of your sources here on gold, EUR, USD, and Bitcoin.
That's right. And our mission for you today is really to decode these seismic shifts happening right now. We want to filter out the headlines, look at the underlying forces, connect those dots between central bank policies, key economic data, and what it all truly means for these three pretty pivotal assets.
It's amazing how interconnected they are, isn't it?
Absolutely. A single statement can send ripples right across the globe. Impacts everything.
Yeah, safe havens, digital currencies, the lot. So we're giving you a snapshot from August 25th, 2025. Right after some really market-moving news, we'll explore the why behind the shifts and, crucially, what signals you should be watching next.
Okay, let's unpack this.
Let's do it. So the macro picture, that really sets the stage, right? And our sources, they all point to one big event, Jerome Powell's speech at Jackson Hole. My first thought was, wow, did he just open Pandora's box for market expectations, or was that like a very deliberate signal?
Well, the market's immediate reaction, it was incredibly telling. He very deliberately left the door open for a rate cut, possibly as early as September. And this dovish pivot from the Fed, it instantly put significant pressure on the U.S. dollar.
Instantly. Wow.
Yeah. Traders are now pricing in, roughly a 25 basis point cut next month. And that whole softer Fed narrative, it just cascaded through other markets pretty quickly, pushed U.S. Treasury yields lower, gave a noticeable lift to Asian equities.
Right.
What it really signals is a shift in investor confidence. They're seeing a more accommodating environment coming.
That's a fascinating read on the Fed. But, okay, is Europe marching to the same beat? Or are they in a completely different path? Is there a real divergence here?
There's definitely a contrast in Europe.
Yeah.
Expectations are actually building that the ECB, the European Central Bank, will hold rates steady in September.
Hold steady, okay.
Yeah. Any talk of possible cuts over there, it's mostly pushed back until autumn. And even then, only if the incoming economic data genuinely softens.
Right, so they need proof first.
Exactly. This more cautious wait-and-see approach from the ECB, especially when you pair it with some recent slight improvements in their PMI data, that's the Purchasing Managers Index, a key health gauge.
Right.
That's helped the euro stay supported against the dollar. It's a classic tug-of-war, really, each central bank projecting a slightly different path forward.
Okay, so Powell's opened the door, markets reacted.
Yeah.
But what I find really interesting now is, like you said, it's not a done deal.
Yeah.
What are the absolutely critical data points we're all watching for this week? The ones that could, slam that door shut or swing it wide open?
That's the crucial point now. The market is very sensitive. Two data sets are absolutely in the spotlight this week. They could confirm or, frankly, unravel this whole September rate cut idea. First, PCE inflation. Personal consumption expenditures.
The Fed's preferred one, right?
Exactly. Their preferred measure. So any big deviation there could, really solidify or undermine that dovish stance. Second, and just as important, is the non-farm payrolls report. The NFP gives us that broad look at the U.S. labor market health.
Okay.
These reports, they're more than just numbers. They're the keys. They'll directly impact the dollar strength, gold's appeal, EUR, USD, everything.
All right, got it. So with that big macro picture clear, let's zoom in. Let's turn to gold. Often seen as that barometer for market mood, especially when central banks are signaling shifts like this. What was its immediate reaction to Powell? And what's that tell us about its role now? Is it still the ultimate safe haven?
Well, gold saw a slight pullback, just a little bit from its two-week high, which was around $3,365 earlier today.
Okay, a small dip.
Yeah, this minor retreat, it was mainly due to a small, kind of temporary dollar bounce. However, the bigger picture, that overarching dovish Powell narrative, that's still providing pretty significant fundamental support for gold.
Okay.
And this isn't just short-term price stuff. It subtly signals maybe a longer-term erosion of faith in traditional inflation hedges. Gold's being viewed perhaps less as a pure crisis haven now and more as a beneficiary of easier money. Monetary easing.
Interesting shift.
Yeah, it indicates a shift in investor psychology, maybe accepting lower real yields for longer.
Okay, so for you, tracking gold, understanding that reaction, that underlying support, that's key. So given this maybe slightly changing dynamic, what are your most critical levels to watch? Not just for traders, but anyone gauging sentiment. And what data could really trigger the bigger moves?
Okay, technically the key is whether gold can properly push past that strong psychological resistance area. It's just above $3,370. That level's been pretty sticky lately. A clear break above that, That could signal a significant leg up, maybe targeting $3,410. Conversely, watching the support around $3,330 is vital, a definitive dip below that could mean a deeper pullback, possibly down towards $3,310.
And the triggers, still the data.
The triggers are clear, yes. Softer PCE data would likely mean a weaker dollar, right? And that would be a bullish catalyst for gold. On the other hand, surprisingly hot PCE data, that could reduce those rate cut odds, putting, noticeable downside pressure on the metal.
So the big takeaway for gold. Bullish tilt, maybe, but it really hinges on this week's data.
Precisely. As long as that September rate cut story dominates, gold has a fundamental tailwind pushing it. But its confirmation, whether it truly breaks out or pulls back, that absolutely depends on this week's U.S. data. It's the validation point. Simple as that.
Okay, that makes sense. And this whole discussion about dollar pressure, it leads us right into currencies, specifically EUR USD.
Yeah.
Our sources show it trading around, 1.1695, 1.1700 today. Dollar still near recent lows. So with the Fed going dovish and Europe being more cautious, how's that dynamic really playing out? And what does it mean for, say, global trade or investment flows?
Yeah, if we connect this back to the bigger picture, the fundamentals are pretty crystal clear. The U.S. dollar.
Fair.
Under pressure. Why? Because Powell opened that door for the September cut. Markets are now pricing in a softer Fed stance, potentially stretching well into 2025.
Lower rates coming.
Exactly. That expectation makes holding dollars less attractive from an interest rate perspective. Meanwhile, in the Eurozone, like we said, the ECB is likely on hold in September. Cuts only may be back on the table later, and only if data softens.
Yeah.
Plus, that slightly stronger PMI data from Europe, that's given the euro some traction too, helping it gain against the weaker dollar.
So capital is flowing.
Exactly. Capital flows where the yield differential might look better or, at least less unfavorable. It forces a reevaluation of relative currency strength.
Okay. So for you watching this pair, anticipating those shifts is vital. Beyond the current price, what are the critical thresholds? Resistance, support, and how could the U.S. data really define the next move?
Technically, yeah, you'll want to watch resistance levels around 1.1750. That's the first hurdle. Then up to 1.1800. A sustained move above 1.1 that would be quite significant. A breakout could lead the pair further towards, say, 1.1830.
And on the downside?
Support levels. Look at 1.1650 first, then 1.162 If the pair loses 1.1620, that raises the risk of a deeper drop, maybe down to 1.15 EO.
And the triggers? Let me guess. U.S. data.
Once again, firmly tied to U.S. data. Weak PCE, soft NFP, likely leads to more euro strength, possibly pushing towards 1.1. Conversely, if we see surprisingly hot data, that could cause a dollar bounce, right? And lead to a pullback for EUR USD, potentially taking it under 1.17 again.
So sounds like a mild upward bias for the euro against the dollar overall, but U.S. data holds all the keys. It could unlock the next big move.
Precisely. With the Fed generally seen as more dovish than the ECB right now, USD does have that mild upward bias. However, and I really can't stress this enough, this week's U.S. data is undoubtedly the real driver. It's going to either reinforce that bias or completely challenge it.
Okay. And speaking of assets benefiting from, easier money, shifting sentiment, let's talk about the one that really grabs the headlines. Bitcoin. Sources say it's around 113,526 grimes today, multiple all-time highs since late July. It's almost like the grown-ups are finally showing up to the crypto party, isn't it? What's fundamentally shifted? Why are these large institutional investors suddenly pouring capital in, especially, you mentioned, from Asia?
Yeah, it raises a crucial question, doesn't it? How deeply do these traditional macro trends actually, permeate assets like crypto, which sometimes feel a bit disconnected? What's clear here is that the big macro story, that September rate cut possibility from the Fed, it's supportive, not just for stocks, but for the broader crypto market too.
Makes sense. Risk on.
Yeah, a use your money policy often encourages investors to seek higher risk, higher reward assets. Bitcoin certainly fits that description. But beyond that, our sources do highlight rising institutional flows and family office flows, particularly in Asia. This signifies a real maturation of the asset, I think. Moving beyond just retail speculation, serious capital is entering the space.
Right.
And that provides significant underlying support, contributing to a pretty bullish medium-term outlook.
Okay, so the easier Fed policy is a definite tailwind, making Bitcoin more attractive, maybe to a wider range of investors now. So for you watching this incredibly dynamic asset, what are the key technical levels? Support? Resistance? the ones that could dictate its short-term path, especially with this new institutional money floating around.
Okay, technically, if you're tracking Bitcoin, keep a close eye here. For support, first level is around $112,000. That was roughly today's low. Below that, the next critical support is $110,000. A sustained drop below 110K. That risks a demo pullback, potentially into the $106,000 to $108,000 range.
Okay. And resistance, where's the ceiling?
Resistance side, look at $115,500 up to $116,000. That was around today's high. Then $118,000. And critically, that big psychological number, $120,000.
Right, the round number.
A sustained break above $120,000. That could trigger a powerful run, maybe towards $125,000, $128,000 even. However, a failure to break $120K, that could lead to sharp drops, potentially back below $112,000. It's volatile.
It definitely sounds like a strong buy the dip mentality is out there, especially with the macro support and the institutional interest. But yeah, a definite warning flag attached because of that inherent volatility.
Exactly. The sentiment, it remains robust,
Yeah.
driven by those broader forces, increasing adoption. But volatility is inherently high in crypto. It's part of the game. And crucially, macro data, just like with gold and USD, could easily flip the short-term direction. Bitcoin, despite its unique drivers, it's not immune. Not immune to the pull of global economic data and central bank policy.
That interconnectedness.
Yeah, it's not just about price moves. It really reveals how global capital, increasingly driven by, algorithms and rapid strategies, just reallocates across asset classes almost instantly at the slightest hint of a central bank shift. Makes local news global fast.
Fascinating. Okay, so we've gone deep into these three assets, understood their drivers, their technicals. For you, the learner, trying to piece all this together, what are the most crucial, maybe actionable signals to watch in the coming days, the things that really tie it all together?
Okay, let's summarize the actionable insights for your decision-making. If you're watching gold, keep an eye on levels near $3,350 for potential support. If it holds there, targets are around $3,370, $3,380. A breakout above $3,380 signals higher ground.
Okay.
USD. For USD, holding above 1.17 suggests a path towards 1.1750-1.18. That indicates continued euro strength against the dollar. But if it dips below 1.1630, caution is definitely warranted. Could signal a dollar rebound.
And Bitcoin.
Bitcoin. While it stays above that $112,000, $113,000 range, bulls might well be eyeing $115,000 over $18,000. However, beyond just the charts, the immediate data, what broader risks should we be aware of? The wild cards that could shake everything up, send ripples across all these markets. The overarching risk, it really remains the U.S. data, specifically PCE inflation and non-farm payrolls this week. These aren't just drivers for one asset. They are major catalysts for the dollar, U.S. Treasury yields, and just overall risk sentiment across all global markets.
Right, big picture stuff.
Absolutely. Any significant surprises there could unravel the current narratives completely. Beyond that, we also need to listen for any new commentary, any guidance from the European Central Bank, any hints on timing future rate cuts in Europe that could dramatically alter the USD dynamic.
Yeah.
And as always, geopolitical headlines, trade news, things that can just emerge unexpectedly. They have the power to quickly shift the dollar's value, redirect safe haven flows, impacting everything we've discussed.
The curveballs.
Exactly. Those are the elements that can really throw a wrench into even the most carefully constructed market outlooks.
Wow. What a fascinating deep dive. We've really seen how Powell's dovish nod at Jackson Hole created this ripple effect. Yeah. How the upcoming US PCE and NFP data are just they can confirm or challenge everything, and how these forces are shaping gold, USD, and even the increasingly mainstream Bitcoin.
Yeah, and this raises, I think, an important question for you, the astute observer listening in. How quickly can market narratives, and indeed market values, actually shift based on just two data points from just one economy? And what does that tell us about the truly interconnected, almost fluid nature of global finance today? Yeah.
It's a powerful reminder, isn't it?
Yeah.
How much seemingly disparate assets are actually linked by these invisible threads of monetary policy and economic performance.
Keep observing, keep learning, keep connecting those dots, understanding these nuances. That's what empowers you to navigate the complexities out there. This has been The Deep Dive, and we're always here to help you make sense of the world one nugget of knowledge at a time.